Good afternoon, everyone. It's Brian Caprice, and welcome to this week's Nadex Weekly Charts and Analysis. June 28th, last one of June, and we are officially in the second half of the year. It's amazing. Time is just flying by in 2022. It's like the fastest year ever, I swear. But we are here. Um, just going to give you guys a couple quick updates out there before we get started today. We haven't been on broadcasting in the morning. We have taken a little bit of a breather. There has been some changes over on the Nadex front. Todd actually is no longer with Nadex. So right now, I am doing kind of broadcasting by myself. We're still trying to figure out what we're going to do, where we're going to take everything. So we just wanted to update everybody on that one as well. Um, with that said, right now we still do have all these Tuesday sessions on the book, so we're going to keep rolling with these. And again, if we can find a solution that works, we would like to bring back the morning market mover. So if you guys like it, you're missing it, you haven't been able to catch it, and you're wondering where the recordings are, please do me a favor, send emails in and say, hey, bring that show back. We had a good time with it. I know it was a blast doing it. And again, it helps when they hear that people are missing it. I know I've gotten a few emails of people saying, hey, the links are not working. But again, let Nadex know that. That's important for them to know that you guys definitely found that was helpful for your trading. So with that, let's jump right into the charts and analysis session for today. For those of you who don't know me, which pretty much at this point I feel like most of you do, we always get a couple new people, obviously. If you're new, welcome. I'm glad you found found us on the channel. My name is Brian Caprice. I'm the president and CEO of Keep Trading Simple. I am not a Nadex employee. I am actually an external educator, is what I would be considered. I've been working with Nadex now, though, for about 5 years now. I've done articles. I've done a number of different education summits, analysis sessions, some how-to sessions as well. Um, love the product. Definitely think it's an arrow in the quiver for all traders out there. And again, that's why I donate my time back to the company to, again, be able to kind of help spread the word with it. I've been trading since about 1999, so quite a long time. It's crazy. You see those memes out there where like, hey, in 3 more years or 5 more years, the 80s happened 50 years. It's one of those things. Yeah, I started trading back in 1999, so I would call myself a Y2K trader. Um, Seen a lot, really started doing this before there was the internet, before there was YouTube. You go to the library or bookstore, you get books that were written 20 years prior to teach you how to trade, had absolutely nothing to do with what was going on in the market. So I was one of those blessed traders that got to learn kind of all the wrong way to do things before finding the right way myself. Um, I did spend some time in an advisory division of one of the big three banks. If you guys didn't know, I had COVID last week, so I'm still recovering from that. Trying not to cough in your ear the entire time. Feeling much better, but yeah, the cough is definitely something that's I do have to fight back every so often. It throws my concentration off a little bit. But I was an advisor for one of the big three banks. I can say that I did work on Wall Street. I didn't work on one of the exchanges itself. I actually used to walk past the New York Stock Exchange every morning to get to my office. But I could look out of my office and actually look at the bull. If you guys are familiar with the bull on Wall Street, yep, I used to literally it was right outside my window. I used to look at it all the time. Um, so it was a very cool experience to me. I got a lot of kind of a different point of view that a lot of people in their lives will never, ever, ever be able to get. Um, very cool. I learned a lot about bonds in there, and then came back out and decided that really teaching was my true passion. I got the opportunity to work with some floor traders, kind of help brush them up on their skills, and really from there, just that's kind of where my career took off to. Love teaching. I love, again, hearing interactions with you guys. At the end of today's presentation, I'll actually give you my email if you guys want to shoot me a message. If you have any questions about anything I said, you're more than welcome to shoot me an email. And it's funny, a lot of people out there, you'll never be able to have access to them, and I try to make myself as accessible as possible because it's really I'm doing this for you guys. Again, I love helping people. Really kind of help get in there, get engaged, and trade these markets because they are so much fun. Um, I did meet my wife traveling, actually teaching people how to trade the markets. This is obviously an outdated picture. You guys know that there's a boy about the size of the little girl's age here. Jin obviously has hair almost probably as long, if not longer, than Melissa's in that picture. Both the boys there are Melissa's height now. So again, a little bit outdated, but with COVID, we never got a family picture. So yeah, I'm due to update that one as well. But that's who I am in a nutshell. I'm a price action based trader. I am not hugely indicator based. I know how to use them, of course. I like using them and see where kind of people are getting trapped in the markets and then kind of setting traps against them, which is fun. So in today's presentation, I will show kind of what I do. Again, price action, supply and demand based trader. I'll throw fibs on there. A lot of people like Fibonacci as a tool, and I do think it's a great tool to use as a confirmation, not as a primary entry point. But it's great because so many times in the market there are traps that are set around Fibonacci because people are not fully understanding how to use it. And it's always great when you're able to front run people inside of the market using it. So I will show that today as well. Now, before we begin, because I am going to talk about charts and things like that, I do need to make sure that we cover this Nadex risk disclaimer. But everybody's heard this once or twice before, but you guys all know that trading on Nadex involves risk and may not be appropriate for all. Members risk losing the cost at another transaction, including fees. Now, you should carefully consider whether trading on Nadex is appropriate for you in light of your investment experience and financial resources. Any trading decisions you make are solely your responsibility and at your risk. Past performance is not necessarily indicative of future results, and none of the material presented herein is to be construed as a solicitation, recommendation, or offer to buy or sell any financial instrument on Nadex or elsewhere. Nadex is subject to U.S. regulatory oversight by the CFTC, and Nadex is a registered trademark of Crypto.com. Many of you guys have known that. Obviously, it's new. Every week I joke that I keep updating the slide, and for some reason it just does not want to save it in the 2022. It wants to keep it at 2021. But yes, it is 2022. All right. So here's the agenda for today. We're going to cover the upcoming news events for the rest of the week. You may say, why is this important? I absolutely love news trading. News acts as a catalyst for market movement. They literally tell us every single week, every single month, every single year when the biggest news releases are going to be. Knowing that, like, I always laugh. People are like, I'm going to watch this from opening to close. I'm going to sit here all day and do nothing else, and I'm going to get this. And it's like, wow, you're missing so much of your life because you were sitting there literally staring at a market doing absolutely nothing for 6 hours a day. That's really productive. You're really making yourself better. Nah, use technology. We know when most of the movement is going to be. Get in there, take advantage of it, get out, right? Do other things with your life, right? Looking at the upcoming news events helps us kind of get an idea and kind of a game plan of when we should be spending our time in front of the computer. Because the answer is not 20 hours a day, okay? Then what we'll do is we'll break down the indices and see where potential trade setups are for the week. We'll break it into forex. Again, there has been some decent forex movement today. From the session I did with my students yesterday till today, I was looking at a couple of the charts to update things. Two of the trades that we talked about yesterday morning went to complete fruition yesterday afternoon, and now I've just kind of slowed down and based. And again, it is summer. The markets do sometimes get slow. That happens, but with as much movement as we've had thus far, again, taking a little bit of a breather is not necessarily a bad thing. And then last but not least, we'll break over into commodities, which has been really kind of an amazing. It's been an amazing year for commodities. Obviously, um, we can think back a year or 2 years ago, and we're talking about gasoline banging around the $60 mark, and now we're like, wait, where are we at? 112? 110? A week ago we were back down at 100. So commodities are absolutely just been a wild ride. But we'll close out on those today and kind of see what's happening, right? I mean, I know earlier today natural gas was starting its rally back up again, up another 2%. Holding it at cheap $6 when the historical average, the average that most of us are used to, is like $1.90, $1.80, and we're up at like $6, and that's cheap now because it's not 9. So yeah, a lot of movement. So we'll break those three down. All right, so with that, let's go across and let's go right into kind of what the news releases are. So I'm going to use Forex Factory today for this. There's many different websites out there that you guys can use. I like this one. It's the one I've been using the longest. They all kind of have their own flair to it. Daily FX is another one that we've shown here on the channel in the past as well. Sometimes they have a little bit different of a forecasted number, but for the most part, they're just it's an economic news calendar. Any of them would work out there. Pick your preferred method. I like this for a couple of reasons. Again, the 24-hour pip changes is nice. Gives me an idea of kind of where our hottest currencies are. A lot of people will be like, oh, well, the pound. Yeah, the pound yen is doing 25 pips in 24 hours. So, yeah, it's not really rolling here, right? Pound dollar, down 95. And again, we're kind of seeing that dollar strength kind of bounce back and forth across the board. But for the most part, we're kind of seeing some pound weakness combined with a little bit of dollar strength. But things like the dollar CAD, 3 pips, 24 hours. Not a whole lot you can do with that. Right? Dollar Swiss, 7 pips, 24 hours. Not really a whole lot there either, right? And even things like minus 17, not a lot of money to be made there. But again, knowing when is the time is always important. Today, we are in day 3 of the G7 meetings. Obviously, that's important. There's a lot of headlines that can come from that one. Right now, We haven't seen any really kind of major blockbuster headlines coming from it. Obviously, price stability and policy changes. I mean, we're hearing these things, and G7, leaders reach a deal to introduce a price cap on Russian oil. This is great. It is what it is. Let's see. Are they actually giving us what the price cap is on it? Overcoming obstructions caused by France. Nah, not really. And it's funny. We want to have a globalized market, and we want capitalism, but what's funny about this one is Russia has other people in the world that will have no problem buying oil from them. Some of those countries actually deemed to be the biggest threat to the United States, and they're going to get oil at a discounted price because we don't want their oil. Yeah, so it says it's breaking, but they're going to introduce a price cap. Um, I don't know. Yeah, kind of a weird, you know, kind of an odd way to put it. We're going to continue to ensure that our sanction packages are not targeting food and agriculture. Eh, kind of another one of those things. It's a little bit, we want to have the free flow of agricultural products. Yeah, kind of. I get it. It's a good idea, but kind of one of those things. Countries are tied in what they do, and unfortunately, the breadbasket is in the middle of a war right now. So, yeah, those are going to be hard scenarios. Again, nobody ever, war is never a great thing, and this one's going to have reaching implications for a long time. So it's always nice when the countries that are very anti against the war are going to tell the people that are in the war what's going to happen. Tends not to turn out too well, but we'll see. Like I said, will there be some trading opportunity from that? Maybe, maybe not. I think a lot of people are starting to get numb to it at this point, and just trying to figure out how the heck we get prices back down again. So we'll see. We do have some other news out again. Bullard, getting ahead of U.S. inflation, a lesson from 1974 to 1983. Bullard has made some interesting comments, and again, in my eyes, he should be running the Fed right now. His comments yesterday basically said that we have priced in, by the end of the year, the market has priced in that we will be at 3.5% interest rates across the board. Or at least in the United States. I think that's an amazing figure. Again, higher if January 1, would I have assumed that we would have been able to get that far? No, not so much. But I think I definitely think that there's some negatives to that number. Not that they don't have to be done, but I think things like housing, I think, are going to have some major, major problems with that one. Now, consumer confidence, we did get today at 10 o'clock. We broke below 100. Again, it was worse than expected, and they adjusted the last one down. So when you get a double-double, that's actually some bad news out there. You never like to see that when there was a downward revision from last night. Whoops, we messed up. It was worse than expected. And then today's figure was even worse than expected as well. So, yeah, not always what you want. But again, consumer confidence is one of those things that, when consumers are confident, they spend money. When they spend money, earnings tend to be good. As soon as you kind of lose that confidence level and you're convinced we're going into a recession like many are, yeah, that's where earnings and everything else starts to go to the downside. So, not necessarily the bright, cheery, rosy morning that we would like, as well as Richmond Manufacturing Index. Again, already considered to be negative, but not worse. It accelerated and got even worse. Um, so yeah, not necessarily the most positive outlook of what we have going forward. Um, tomorrow, okay, tomorrow we got a lot of news out there. We do have the OPEC meetings. Again, right now I know that the EIA is kind of all messed up. Their data's lagged. That's messed up. So our oil inventory is kind of messed up for this week. But a couple things we have tomorrow that I think are noteworthy. One, we're going to get that German preliminary CPI data. Okay, what does inflation look like over in Europe? Europe is supposed to be raising their interest rates. The euro, right, is supposed to be raising them in July. I think this will help give us a gauge of kind of what it looks like. I'm assuming it'll be 0.25, but you never know. Um, every time we get another CPI reading over there, I think that's where we'll get a little bit more to it. We have OPEC meetings. Obviously, OPEC is an oil cartel. Russia is actually part of it. They're part of the OPEC Plus group. Um, their meetings are always important. The United States was trying to create like a back end deal with Saudi Arabia, and Saudi Arabia was originally not have it, and now they're like, well, we need to create price stability. Um, we'll see. They haven't been necessarily the most U.S. friendly in policy, so we'll see if anything comes out of that tomorrow. But it could definitely move around the commodities market a bit. We have Messer speaking. Messer not necessarily one of the biggest movers. We have final GDP numbers quarter over quarter. Look at that, locking it in. minus 1.5%. So never want to see your GDP going down. Um, Tomorrow's kind of the confirmation of that as well. And then obviously there's some speeches going on. Everybody's speaking to the same thing. This policy panel at the Euro Central Bank Forum, um, in Portugal. It's a panel discussion. That's why there's multiple speaking all at the same time. Yeah, there could be some headlines. It's probably going to be the same headlines that we saw. Russia's bad. We should not do anything with Russia. We should, yada yada yada. Um, Unfortunately, it's if you look to see what's going on and look at other news, I mean, literally not even a week ago, there was a summit with India, Russia, China, and I believe it was Brazil. Four large countries, a lot of people, a lot of the population is represented with that group, and they're all on stage holding hands, patting each other's back, talking about how strong their alliance is and how it's never been this strong ever. So, you know, yeah, it's kind of one of those. So we'll probably get some headlines. I don't know that we'll get a lot of market moving data from it though. So although it's all red tomorrow, I don't think that's going to be the biggest issue. I think that basically this it's going to be the final GDP numbers and then people talking about stagflation. I think stagflation is going to be kind of the name of the game that a lot of people are going to start throwing around. Friday, this core PCE is extremely important. The core PCE is the Fed's preferred gauge of inflation. We already know inflation skyrocketed much higher last time. We were kind of at 30-year, 40-year highs. Seeing it again in there, um, you know, uh, it's an important figure. It's expected to go higher than it was last time. And remember, we're a couple rate hikes in already, and inflation is continuing to rise. And everybody keeps talking about what's going to happen with it. Um, Interesting though, I did actually see an article this morning. I don't see it in here. What we need to take away from restrictive territory. There was one thing that I thought was very interesting. They basically said that we are going to start seeing some price reductions. Okay. Now, the price reductions have nothing to do with the Fed whatsoever. What it is, a lot of these big companies, we've heard it, we've seen it in the earnings now, the Walmarts, the Targets, their inventory is way too high. It's above the thresholds for them. So they're discounting and trying to sell everything to reduce their inventory. Basically, what it was they did a lot of ordering last fall, assuming that demand was going to increase at a much expanded level. And demand increased, but not to the same level that they all had forecast. They jacked their inventories up, and now they're at dangerous levels of holding too much inventory. So they have to start discounting it. Has absolutely zero to do with the Fed, but it's a little bit of a price break for us. Um, Once that inventory is gone, we're back to kind of the actual situation we were. So we may actually get some type of a temporary type halt in there, which would be good. But some of that we'll see again in this core PCE, right? And again, this is a big one to watch on Friday, particularly in that 8:30 time frame. There'll be a lot of reversals. We'll see movement in price move right before that 8:30 window, kind of telling us what's going to happen, and then obviously the turning points will be 8:30 in the morning. Okay. So again, big news day on Friday. That's one of the biggest releases that exists right now, particularly because the biggest problems we have right now are inflation. This is the number one gauge of inflation that exists. Okay. So, and again, expected to be higher than it was last month, which is not really the best thing in the world. Here we go. S&P home values. Yeah, home values are very interesting. Home values are going up, and again, when inflation is out there, again, people are getting paid more. Home values tend to rise. The problem is we're also seeing 20-year lows on mortgages because the interest rates are going so high. Um, I have a friend who's she just recently got a mortgage like 6 months ago, and she's like, "Now's the best time. Don't be scared of 6%." It's like, well, if I'm paying 2.8, why would I refi into a six? For 15 years or 20 years. Like, how much more is that going to cost me? So, and that's again, that's what we're seeing in the data across the board right now. Is yeah, mortgages and refis are basically shriveling up to nothing, and again, new mortgage loans are basically drying up. So hard scenario. So, but yeah, so that's it on the news front. Like I said, there's a couple things in here. Recession is not my base case. The economy's strong. Yeah, but you also said that inflation was transitory, Williams. So we need to get in somewhat restrictive territory next year. I love it. Strong recession is not the base, right? But we need to get restrictive next year. I love they say these comments for like fair balance. It's like, yes, everybody's pretty under the assumption that yes, recession is here. Is it going to be a bad recession? An easy recession? There are a lot of recessions out there, right? So we'll see. But right now, again, I wouldn't say anything out here besides this core PCE is really on the radar to where you'd be like, hey, watch out. right? So we're pretty good there. Let's go in and let's start looking at kind of where we are with the markets today. So right now, again, we're going to start off with the VIX. As you guys know, the VIX is a fear gauge. It's basically volatility on the S&P 500, particularly SPY options. SPY is the most traded option in the world. Um, and again, for good reason. It's a plenty large product. It's a great beginning option product. But it's basically giving us a kind of the fear gauge, and the fear gauge is starting to rise. Typically whenever you see a green VIX, you tend to see red markets. Again, it is kind of a fear gauge. It's one is kind of chasing the other one. It's not exactly. I mean, there'll be times where like the VIX is green and all the market is green as well. There is a little bit of an anticipation to it as well, but seeing it up 4% today, everything is pretty solidly inside of the red. Um, Now, it is not necessarily a supply and demand based trading instrument. Again, it is a gauge of something else, so it's not like, oh, there's a lot of sellers up here, people that want to sell VIX. No, it's not necessarily like that. But looking at this, you can see that the last time that it was up in this 28.5 area, price was obviously pushed down again, and even over here it was pushed down again. And it was an area kind of this 28.50 here that found some stabilization in there, and then all of a sudden it broke through, and then it became like the top, right? So we're kind of there right now. Again, not being necessarily supply and demand based, it just gives us a gauge of where fear is in the markets. And again, that consumer confidence number, it shows you that yeah, there's more fear out there than we overall look, or we overall kind of assumed. Now the dollar also spiking up, and again retracing. This is a pretty nice move from the European Open, which is here driving it off that 104 all the way up. Came up to the 104.60, and then again 10:30. We know that 10:30 is the magical time. 10:30 was literally the peak, and we turned to roll back down again. So, as far as the dollar is looking, we got this little area of buyers right here, which is a decent level. If it breaks through, it looks like we can kind of cut that 30 cents back all the way down to 104 today. So, could be a foreshadow of where we look for the rest of today, potentially even into tomorrow. Um, let's start off with the indices. So, the indices have been very, very kind of sideways, as you guys know. I mean, we kind of ground up last week. We typically look at this on the 15-minute chart. It typically makes the most sense. And we had a zone here that, again, with my group, this 39.44. I actually had this marked off last week. Again, a nice little drop into this area and a punch out of it, and then we touched it here. That was kind of the confirmation signal. Hey, listen, there are some buyers in there. Price was unable to break through that, and then got kind of not only pushed but gapped down. As you can see, this 39.44 we push across. We've already hit it once, and this was yesterday. And then that's exactly what we did this morning. And you can see, where did it touch? Right at 9:30 this morning. On the channel, this is what you use for the open. And there was the push. I mean, we knew that it already pushed back down for 1 to 3. We knew that we liked the idea of this basing going even lower. And, we always talk about, being able to make trades at the open. And again, there's your 1 to 3 would look something like that right there. So, I mean, the trade is out, right? Trade's completely out, and now kind of at 11 o'clock this morning, it's kind of finally halted in here, and we were looking for some type of a Harry Potter trade here, a break, and at least a pullback of some sort, and we haven't quite got it yet, but again, we were already in a trade about three-fourths of the way through for that level, so whether you took this short again is entirely up to you, but nice little opening print trade today. And again, for those of you that have been watching the channel, you guys know I'm a huge proponent of looking at the 15-minute candles. This was another one of those ones. If you look at 9 o'clock this morning, 8:30, it was up. It was up. It was up at 9 o'clock. At 9:15, boom, it shot up again, right in time for the 9:30 candle, which is right when we ran into the zone of sellers at the 93.44. So, and immediately turned. So, is this one of those trades you guys could have traded at the open today? Absolutely, 100%, without a doubt. Um, it was there. It was pretty well defined. And again, if you've been watching the channel, we talked about it last Thursday without a doubt. Friday we weren't on, and then on Monday, I know for my students, I talked about it. So one of those levels is pretty decent. So where can we stop? We're in lunch right now at 12:25. We are seeing some basing here. I would say overall, I'd be looking for sellers coming in right around this level. We got a little bit more to go with it. My opinion is that, if you can get one good trade every single day, that's really kind of what you're trying to shoot for. This one is unfortunately kind of all the way out. And I would say, although it's another hit of that level, it did not pierce very far again. We can literally kind of just drag this over and say, listen, if we get back up into that 39.42 level, there's definitely been some sellers up there. And again, that area is wedged between the 50 and the 61.8 on fibs. So it is a decent level. But right now, trade's already done for the day. You're not going to really necessarily jump into it again. If you are waiting for a Harry Potter short up with a little bit of a pullback, again, we'd be looking for an entry all the way down to 39.31. Right now, the best way to play this one, and again, if we continue to push lower, um, I think that this area down below probably has some decent. Again, it didn't explode off of that level, but I would say that there's probably a potential reversal in there. Um, is there some type of a catalyst that literally turns this and sends us to new highs? There's not many out there right now. There are different news pieces out there, but today has been pretty negative. Eventually, you're going to have profit taking coming. So I would say that there is probably a reversal trade in here. Again, these are always hard ones on a 15-minute chart to look at lunchtime. But again, if we can bounce back around into this 31 or this 38.30 level, again, there could be there could be some opportunities. But I definitely think the 39.42 would be one I'd watch out for. NQ kind of had the same thing, and you can see it right here. 8:30, it started pulling up again. It pulled back again just in time, and then drove back up again. Now this one we had a level a little bit higher. Again, there was able to kind of it pushed higher into here, right, and really started to grab this zone up top. Really, if we mark this off as a new level there, that's what we ran into. But kind of the same idea at 9:30, it drove straight up into that level and then turned and rolled. Looks exactly like the ES. There's not much difference. We talked about a profit target all the way down here at 11,840, and you can see we actually broke through, got down to the 11,800, just slightly below that as well. So I think there'll be some profit taking coming in. If you guys wanted to run some fibs on this one, this is one of those instances where you could and say, well, wait a second, if we pull back up again, it is lunchtime, we're driving back up. Yeah, there will be people that try to take this short, right? There'll be people that when it comes back in here to this 11,879, they look at this and say, well, wait a second, that's a 23.6. This is a downtrend, right? We've been in a downtrend over the last day. And some people will actually scalp this even further and say, well, wait a second, it's right there. That's where it is, Brian. That's the motion today. And again, all that does is pull us just down a little bit lower. And if you look to see what was there, that also just happens to be this old profit target that I said, hey, watch this. This will be the profit target. If we come back through and we base back up again, that would be one of those violated zones, that Harry Potter trade, where we come through, we base below it, we pull back up again. And again, not only were we supported by the old buyers here, but then all of a sudden you get the 23.6, that trend continuation to the downside. So interesting play on that one, right? YM did the same exact thing. Now, YM didn't necessarily have much up here. We talked about some basing, and we're looking for this one to push through too. And it's doing the same thing. It's coming through its basing and it's pulling back. We were really looking for the break. And, again, 8:15, 8:45, 9, 9:15. It literally before the news or before the open today, drove it straight up. We broke through the top with a Globex high, and everybody's like, "That's it, go long." And then boom, it just dropped right back down again. So um, this one, there was a little zone right in here. Okay, um, there was a small zone in there. I wasn't the biggest fan of it. I didn't necessarily like it formed at the right time. It was like 9:15 in the morning. It was a decent little piece. I like the one a little bit higher above this 32,000, but if I push this across, you can see, had we been on all last week, we would have probably marked this one off. But you can see that's exactly what it banged off of today. Um, and again, very easy to follow. Again, 15-minute, you're looking for pullbacks and basing, and that's exactly, look, base, and then boom, exploded down. It didn't have the confirmation touch. That's why I didn't necessarily have it marked off. But again, it's that opening print, right? 9:30, we drove right up. That's all it did was kind of baited us on that one. It broke through the all-time, not the all-time, the overnight highs. Everybody's like, that's it, go long, go long. And, it did what it's supposed to do. So right now, I would say that it's more setting up for this Harry Potter trade short, looking for price to come down to 90, I'm sorry, 39, 39.70. As you can see here, we had the confirmation off this, but let's pull this just to make it a little easy for you guys. Let me see. Let me pull kind of a more of a near-term fib in this one. That's what I thought. I was looking for this right there. So this level, I'll turn it green. I would say for today, this would be probably your downside target. There is some basing in there, and you get a confirmation pop. We knew there was an old level that was kind of tricking people right here, but it based, it popped, and then took off. It also happens to be right at a 50% retracement. Okay, so you're going to have fib algorithms stepping in saying, hey, listen, that's where we go long. And that's sitting right at what? 30,812. So, if we can get some continued push down maybe in the overnight, if we can start the European session over here. See, European session starts right there, All right. If we can push down, that could be a disappointing rollover for tomorrow morning as well. And again, all that would be was a reversal of today. Nothing earth shattering there. Same thing with Russell. Now, Russell, this was a choppy level, but going back and forth at that 50. It hit it, bounced, it hit it, it bounced, it hit it, it went down again. Finally came through and then started to try to chop through the top, right? Kind of went to do a new high, came down, chopped sideways in it again. And this one was a little bit more challenging again. We were looking for 1800 being kind of a reversal point. It Its high was 945 today, so it drove price up in a short, but unfortunately it didn't quite get up. We were really looking for that 1800 to be hit on that one. It made it to 1795, so we missed it by 5. I would say, this one, as far as kind of like Harry Potter shorts go, this one has an area here where we had some basing and we hit it, we hit it again and it popped, and it came down and hit it again. We just hit it again, which is great. I'm totally on board with that. I don't mind that at all. But the way that this is formed right here, we have three nice kind of large bodied candles with no wick pullbacks. That's a racetrack every day of the week, right? I don't know if will be the final time that it goes through or not. It could potentially bounce off of it one more time, but a 1 to 3 trade is only about there. It's not really that big. Again, we want to make sure that we have our profit target out at this level right here. There's plenty of room, right? There's plenty of room for this one. So, this could be one of those ones that if we can maintain it and hold it till the end of the day, there may be some opportunity on maybe a call spread or even a binary on a daily basis to be able to kind of take advantage of that one. And again, whenever you see pullbacks like this as well, I prefer the pullback a little bit lower underneath the basing zone. That also means that there is a potential out there for a knockout, right? One of the nice things about knockouts are that they as price continues to deteriorate, dropping farther and farther away from price, right? It stops them out, it takes them out, and new ones print, so it's in closer proximity to it. When you get a pullback, that means not only because again, remember when they print, they give you a little bit of a buffer on the top side and the bottom side, right? It's not right there, so they don't have to print a million contracts. As it pulls back, this gives you the ability to get into something and again lower your risk on it. I prefer if it's below here, not above. But again, you can kind of see what it's doing, right? That impulse, that correction move, that impulse, that correction, and now we're struggling with an impulse. But again, it is 12:30 when everybody gets back and they read the bad news, right? Whatever they missed at lunch, this could continue to drive things to the downside. All right, so those are your indices trades for the day. Indice wise, again, I think for the Russell at least too, I think look for price to come down to 1725 before we look for reversal. Oh, sorry guys. I'm telling you, I took cough medicine before I started. I was like, maybe that will help. It kind of is. It's kind of not. Probably where the target is, and again, I don't think there's anything earth shattering. I think PCE is going to be the next big coin that drops for all this. Going across the currencies now, currencies very very choppy. So here's a level I talked about it for my group yesterday, talking about it 50%. I'm not too I'm not too shy about this one. We were looking for 69.69 and we made it to 69.65. So I missed it by 3 pips. I'm okay with that. It happens. Again, are we channeling or are we going anywhere crazy right now? Is this pair trending right now? No, it's minus 0.02%. It's just not necessarily moving. It's just really kind of bouncing back. So, we had a trade. It got close. We ended up missing it. Again, it's going to happen. And again, sometimes in the spot realm, you miss trades by just a few pips. One of the nice advantages is maybe there was an opportunity to get into a binary or something here because, again, it drove up. European session was right here at 3 o'clock. This is when things would turn. The 3 o'clock candle is right there. So you may have said, well, wait a second, it's 3 o'clock. We're close. We're starting the base. If this breaks below, I'm going short. And if you did get another entry, right? But either way, it was a nice little push to the downside. This thing traveled about 40 pips before running into buyers on the bottom, and now it's kind of stabilizing itself, pushing back up. So I would say the 69.69 and 69.93 are both decent levels still. Again, I have an alert sitting up here at the 61.8. This upper level up here, you may say, why is this dotted line here? Why you got this little alert thing over here? I do like this one a lot just because we had a decent base, a strong push, and one touch of that level. Actually, 2 touches of that level. But in the big downward push, that's also the 61.8 level. So it's a supply zone for me. It is tested twice and barely breached that zone at all, showing me that there's still some sellers in there, as well as it also kind of lines up with a 61.8 pullback, which fib traders love 61.8s, right? They love that one. So That's why we got that one lined up the way that it is. Um, all right, let's go to Aussie yen. Aussie yen. So Aussie yen, we were bouncing off a level, and you can look at this. We had our, we always talk about four touches. We had one, we had two, we had three, we had four, and we were like, oh, come on, can you grind down? We had five, and it was trying to grind down lower, and it got about halfway, and then finally came back up again and kind of did it on the other side. And it's trying its best, it's trying to give us yen weakness on this one, but I'm sorry, yen strength, but it's just very, very hard to have yen strength come into this one. So again, this level has worn itself out. We don't really need it anymore to the top side. But I would say overall, let's see. Let me see if that just went off a 61.8. No, it went off a 78. So, and again, there's different people have different opinions on this. I know some people that like the 78.6. I don't. Once it hits a 78.6, to me, it's completely done. I don't focus on anything past the 50 or 61.8. But again, it is kind of coming off the same sellers in here. And actually, I guess it was a tested level. If you look at the basing level here, look at the basing level right there. You can see that there's where your confirmation was on that level. So I guess it was one. I don't love it. I think it was a lower quality. Actually, let's bring this back up to 30 minutes. But it is starting to pull back down right now. So I would say, let's pull this off. Let's see in this direction what we got here. Yeah, I was trying to see where the 50, if it came up to a decent level. And yeah, it's not bad. I'd say this one's got a little bit more room to run. Nice little push off here. You will have the 50% help on that one. This one has got about another 46 pips, so we probably got another 6-8 hours before we can get over there. But that could be a nice little rebound in the middle of the night for the Asian session. That price would come in at approximately 93.74. I'm sorry, 93.79 is where that one will be kicking in at. So it's not a bad level. Again, it would be a 50% retracement. It is. There are some buyers there. There is a nice base. Excuse me. There is a nice strong push, and that was a European open. Excuse me. That was a European open based entry. So not a bad target. Not a bad target. Something small. Something small. And you got some news in here. So again, if we can grind back down for some of this news, that could be a nice little takeoff point for the Aussie yen. I do think the Aussie is justified with some strength. The big question is going to be what do we see happening in the gold market? Right now, gold is basically flat, so it's losing some of its steam. If we get a nice little push in gold, that would definitely suck the Aussie and give it some more power and help us kind of generate this one to the top side. But again, it's only down about it's up about 0.5%. Kind of the same thing, euro pound. So we talked about this one hitting a level and it hit it and pushed down and based and hit it down again and then came up and hit it again and then pushed again and drove back down again. So remember, zones don't last forever. We mentioned that this one had pushed it deep, but if you'd taken a new draw on it, again, this one has been hit a few different times. Right now, I'm going to remove this red and we'll just leave these two on. I still like this one to the downside. I think this one does come back down to 57.70. I'm sorry, 85.70. We do have some news to justify that as well. And again, obviously, European market, but seeing tomorrow morning this preliminary GDP number or CPI number, if this number is higher than the forecast, meaning that they're going to have to raise interest rates even more, or even less, maybe it's not as bad. I think this gives us a little bit of a catalyst for this one for the euro pound. And again, could be a weak number, could not be. I mean, they kind of have a little bit different of a system going on right now. Excuse me, than we do. Just the way that things work. So, do I have an entry on this one? Not really. I would say that if anything, I'm leaning more towards pound strength. Euro weakness on this one. I'd like to see this turn and roll back down again, but not something I'm willing to trade right now. I'll use this as a proxy to figure out whether I trade the euro dollar or the pound dollar. Now, euro yen, we did talk about this being the upper kind of reaches over here. And again, this is a 7 o'clock, really 8:30 kind of hit of that one. It did actually get stuck right at this front run level, and that's why we had it marked off, saying that, yeah, there's probably some sellers there. And it hit it and it pulled back. It hit it, pulled back again, hit it, pulled back again, and then it went higher. So again, couple quick succession hits to it, and then stop and pull back. So I would say kind of the same idea. I think European weakness is probably due at this point, pushing back down again. The problem with this one is there is definitely a level of basing sitting right here. So again, you've seen it. We've hit it again. We've hit it again. We've based above it. We've kind of hit it again. It's got to break through that level, right? Um, right now, I'm not super concerned with that level. One, two. Let's see. We may actually have some buyers stepping in for one more time. just because, taking this low to high fib draw, it is going to be right around the 50% retracement level. So, but right now, I think overall targets for the euro yen would be down at 141.02. And again, that's also right around the 50%. And it's a tested level down here that we know about, this little touch right here. It's a decent runner from where we are right now, about 230 pips. So it is more than a day's worth of movement. Um, we need a little bit more for it, right? But again, if you're looking for kind of a decent entry, whoops, I would say getting a little bit more of a confirmation on it would be better. We will hit the zone, and if we hit it and bounce, that's not the end of the world. But when we do finally break, look for that kind of pullback confirmation. Again, i.e., the Harry Potter trade, and that's kind of what we're looking for. And that brings us right down to where the buyers are here, which I think is good. Um, Again, we base there, then the second push down would be 141. So yeah, it could be if you're looking for two profit targets. One would be 142, and the next would be at 141. Two 100 pip movers to the downside. Euro dollar. So Euro dollar, we talked about having some tops here. We marked it off. It was, not really the cleanest. It's an old level. It's been hit multiple times, and you can see it. It served as more or less as a top. Here's the European Open for the day. It's literally been pushing it just straight down. Again, European weakness, dollar strength. 105 has been the magical number that we've talked about. We got really close today. This one today on the daily basis got to 105.03. So again, missed it by 3 pips. Oh well. It happens. We knew we had buyers down there, but that's where you're looking for the reversal. Right now we can remove this. I'd say this level up top. Whoops, I did not want to move that. Let's see, can I refine this at all? I'm going to shrink this a little bit. There we go. Right now I'm still going to say if we can get back up to 106.21. Actually, not 106.21. 106.25. I think there's a decent level there, and again, as you guys can see, that would be a kind of an overlap with the 61.8. Again, fib traders will jump in on that one. And we've had some problems getting up there, but it's the last time we've had really decent selling. So right now, with these pushing higher, I think that one's probably due. Where we go with this 105, I'd love to get some parity in the euro dollar. I think that would be awesome. That's about what it would take for me to book a European trip would be parity. Think it would be awesome. But right now, I think it's got too much stabilization, and we got some bigger numbers. Again, we talked about this 103.64, and you can see that acted as a bouncing level. We drove down and kind of hit it and kind of bounced off of it. But we had another level at 102.37. So as much as I'd love to say, hey, we get below 105, that's it. Look for short. Right now, you have to, respect the fact that really 104.50 has been a level. Again, here's another touch of the 104.70. And again, we've gotten buyers that step in, confirmation. Buyers that step in, confirmation. So there are a few levels to the downside. We really kind of need something blockbuster to come out. And again, in the summer with lower volume, it's always hard for this one. But I would say right now, the two big kind of tops and bottoms I'd be looking for is 102.25. And then obviously on the downside, 103.64. Okay. Pound yen. Yesterday with my group, I mentioned pound yen. I'm not really that excited about it right now. You're seeing kind of the highs get lower and the lows get higher. So you're really seeing a lot of consolidation. And you can see where I kind of drew it. If I had literally taken a box and said, well, listen, this is where we're stuck right now. We're stuck right in the middle of the box. So it's not really necessarily trending. You can see in 24 hours, you guys can see here, pip change 24 hours, zero. And again, this is the pair that one of the majors has the highest ATR, and it's zero. There we go, one. Now we're rocking, baby. One. Right now, I would say that the pound yen is not necessarily trending. Everybody's waiting for that kind of next bit of news. The pound's got plenty of news that could come out. They're talking about restructuring Brexit and half a dozen other things out there. So I think there is some potential for this one. But right now, the only time I'm interested in playing it is when we see news. Like an example here is Bailey speaking. Yeah, Bailey could say something that moves it. Over here, production. What else we got? GDP growth. There we go. That's our next big one. I would say the next big time for me would be here. So we got some room. Best way to play this for the rest of the week is kind of say, hey, listen, we're still kind of sitting in that channel. Have we started to move out of the channel? And then as we get closer to these news events, look to see if price pushes down or up before the news event comes out. And if it does, then again, see if it's in a 30-minute level, look to take it and reverse it in the opposite direction. But right now, not enough catalyst, not enough movement. And again, we talked about this consolidating. All it's doing is consolidating in and literally 0 pips in 24 hours. One. What are we at now? -1. Now we're at -1. We were at +1. Now we're at -2. There we go. It just, for something that has such a huge ATR, moving 1 pip in that time frame means that there's no trend. There's better opportunities. Pound dollar. Now this one's pulling back from this 123 number. Um, Kind of the same idea. I mean, we've seen it push up and then push back down and then kind of fight its way up and back down again. It's really stuck between this 123 and really this one. I don't. I guess 122. 122 is kind of sitting right here. So it is more on the bottom side. And again, you may say, well, wait a second. I mean, the pound's not really moving at all. What's driving this? Right now, it's the dollar that's driving this. But all this dollar strength we've seen in the overnight, particularly from the European session, I do feel that it is in a reversal time right now. If I had to make a call, I would say I'm a little bit more bullish right now, the pound dollar. Not that I don't think that overall the dollar's in a much, much, much better position than the pound, but this is kind of what we're dealing with right now. It's again more channeling. I mean, this is really kind of what it looks like, right? In 24 hours, this one is actually down 177 because again we've gotten this push down again. But right now, what do we know? We know that we more or less have a channel here, right? Here's our bottom, top, bottom, top, bottom, top, 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 top. Here's the bottom. If we push back up as kind of that, kind of return to the mean, the 2250, all this does is deteriorate and suck up the whole rest of this. And this is the biggest move right now. I guess it's not the biggest, second biggest. All right. So I'd say I'm more on the bullish side for this one. Dollar CAD. So dollar CAD, we had a nice little setup yesterday morning. We talk about that, what fib traders are looking for. Yesterday morning, right at the open, again, session open is great. 10 o'clock, 10:30 is right where this one was actually kicking in at. We talked about, if this was going to continue to push lower, and I said that 130 was a bit high. Right around that 31, the 23.6. I'm sorry. We had a test at the night before at the U.S. market open, right? We had pulled back and literally got stuck right here at a 23.6 pullback level where there's an area of confirmation and we had sellers in the overnight. So all it did was push back down again, bounced off this level a little bit, went lower. And again, at this point, again, where we are, 128.66. Again, you may say, where's the strength coming from? We're seeing dollar strength. Why the heck is this going down? This is a gold play. I'm sorry, not gold, oil. Oil is up 2% today. We're back up 111.80. Even with the news we just got, that's it. G7's capping Russia. We're going to kill Russia for once and for all. And oil's holding firm. So right now, I would say, again, if we want to adjust this down, you can see that kind of the same scenario for this short that we had before. Whoops. Let's see. Let me pull this here. Kind of the same thinking, right? If you're looking for levels of basing, it just happens to be at the 23.6. That's actually, what we just bounced off of now. Let's see. I would say the next level right here looks like it's going to be down here, right? So a little bit below where we are. Let's see how much room is that. That's about 50 pips. So got a little bit of room, right? Not horrible. But again, a little bit deep in the zone. Another way you can play this is knowing that it's a 23 is say, hey, listen, I'm going to adjust it right here. If it pulls back up again, that's where that's where I'm going to look. I'm going to get into the new, and again, 13 pips risk. It's tiny risk, right? Let's see what it looks like. 1 to 3 is only right there. So again, it's not even running into the fresh level on the other side. Again, just kind of looking at that, and again, basic analysis, right? Basing, confirmation, pushed higher, 23.6, so it needed a little bit more. And then again, not necessarily a whole lot of buyers until you get your 1 to 3 on this one. So 14 for 43, not necessarily a bad little pip trade there. Dollar Swiss. So dollar Swiss yesterday, somebody was obviously listening to our presentation. We hit this at 8:30, and then we're kind of maintaining and holding, and then immediately just dropped all the way down. And since that time, since the drop yesterday at 11 o'clock, this red candle, this big move ends at 11. From where we ended that 11 o'clock candle to where we are right now, it's moved a total of 13 pips. So dollar Swiss has, unfortunately, all that movement that went yesterday has now kind of flatlined itself. Seeing some data out of Germany tomorrow morning will actually move this one a little bit. We'll see, again, obviously different economies, different ways that they handle monetary policy. But again, for the most part, if one European country has the issue, a lot of them do. I will say there is a Harry Potter trade down here. You can see it, a break of 95.23. This is one we've had here for a while, but it was just the candle formation that we really, really liked. Again, don't have the entry yet. It broke through, but never gave us the entry. And then, excuse me, we just hit the zone again. So I'm kind of liking that one where it's like, hey, you got 2 extra hits on that zone, but a break in 95.24 looking for this to turn and roll. And it looks like that's what it wants to do. It's got some buyers in here, but for the most part, I wouldn't be surprised. Every other chart we've seen is dollar weakness kind of starting to roll in, and that's kind of what we're seeing here as well. That continues to drive this lower with the dollar Swiss being, the dollar being in the first position for the dollar Swiss. Pound yen. I'm sorry, not pound yen. Euro yen. Dollar yen. Jeez, it's one of those days. Um, so we talked about tops and bottoms. This one is actually relatively close. This 136.53 level is where we're looking for a roll. As you can see, it kind of came up and it just stopped, right? We're talking about kind of a top to bottom here of this basing level of about 19 pips. With it, if you look to the left, you can see that there were some sellers up here. I do like the 136.53 more than where we're at right now. Um, could you look for a sell here? You could. I shared this with other people in the past. One of the mentors that I have, and you know, one of the guys that I've pulled a lot of information from as well to kind of add new components to the way I trade is they talk about when the trend changes, and he keeps it very simple, and he talks about color changes here. Once we have a confirmed color change here where we can get a red green red that doesn't violate any rules in there, this could be an opportunity to start taking this short. And again, fib traders are going to look at this and say, well, wait a second, where do we got to go? Well, wait a second, if you look down here, there's your level of basing. It just happens to be between the 50 and the 61.8. There's a little bit of a pullback here. This 23.6 level, that may be a level that people jump into. But for the most part, if we see dollar weakness crank in, again, dollars in the first position, should turn and roll back down again. It only needs to go about 82 pips. So a little bit more than one day's worth of movement, but any number of things could really help turn that one around. We may even get a little bit of yen strength coming in. I mean, a couple different pairs. We have yen kind of poised for an area where some profit taking is going to come in. Strength will walk back. This one is very reminiscent of the euro yen. So again, decent color change could give you the opportunity. You can use this level up top to establish a level of risk, particularly if we pull down and pull back again. Um, something smaller like this, 15 pips worth of risk. You could do a quick little, 15 for 45 to the downside. 15 to 45 puts you right there, which just happens to be where I said get out of this trade because, again, there's some buyers coming in right there. So hold on, let me make it exact, just so that way nobody can, you know, question. It's like, well, wait a second, it only worked because it's not straight. There you go. Now it's completely straight. All right. So again, a 1 to 3 actually fits in there. Look for a little bit of a pullback. And again, maybe it's the European session that actually helps us take that and turn that and rolls it back down. All right, let's look at commodities. So commodities. Okay. We talked about with my group yesterday. I talked about how 110.13 and 102.78 were going to be the two levels, and we did. We kind of pushed up and then pulled back again, and then hit it again, and we've hit this. I mean, you can see how much it ground through that level already, and we're still kind of in that same proximity. I mean, it started to push through that kind of middle area. Where we are right now, when you look to the left, is you can see this big run up in price, right? There's not really a whole lot of buyers over here. I hate to say this, but there's not really a whole lot of buyers until we get up to 150 or really 116, right? Um, I mean, 116 is quite a little run. I mean, it's already moved 2% today, and we're up over $2. You add $2 to that, we're sitting up in this range. We're really almost there. So remember, the EIA, right here. Remember, normally we get our EIA data, right? But today there was some issues with it, right? We will not publish new or previously delayed data June 28th. We will publish our weekly petroleum status report tomorrow. So the oil inventory report that should have came today will be here tomorrow. All right. All right. So again, having all kinds of problems, delayed, not delayed, things being released. They're having some problems when the energy commissions are, having some drama. What I'm saying is if we get a nice little push up, we may be able to get a turn and roll from that level. So right now, again, oil in the middle of the day, it's always harder to trade. There are no sellers sitting above it. So if we do continue to rally up, again, just be aware that there is nothing over here that shows us that there are sellers in this position. Right now, using these same two levels, though, if you run it all the way up, you can see that. Actually, I guess if I run it from to here, right? You didn't quite get into the 23.6, but again, it still kind of just shows you that we're in that same proximity, close proximity. There's your level. there's your touch, and there's your takeoff point. So right now we'll remove this. Actually, a couple things here. One, I'll probably shrink this a little bit. We're going to go to there. I would say that there's probably a nice little setup here, right? Or a potential setup, right? I mean, it pulled back, it hit it, it confirmed the long. It did hit it one time. Eventually, when these guys get broken down and kind of push through, you can see that there's a nice little run up, as well as the 50% is sitting right below it. So it's one of those ones. A drop below 108.83, looking for that to push all the way down to 106.82, right? 106.82 could be a nice little target to the downside on that one. And I'd be okay with that. I don't mind 106. 106 is much better than 112. So natural gas is a mover again today, though. So natural gas, we did end up finding a bottom yesterday, right around that $6 mark. Again, $6 is a big psychological level. Made a few stabs for it, and then kind of retraced up again. Again, we did have a parabolic move the other day, dropping from 680 all the way down to 6. This is a on sale price compared to what we have had up here. But I would say right now the big question is going to be is, we have this gap sitting right here. Okay, we have kind of bounced off the gap twice. This is a major target for me, and again, I think it could be a reversal point. But $6.96. Right now, with heat the way that it is in the United States, there's it's like there's heat watches everywhere. The asphalt is melting in Texas. Natural gas is not one of those things that people are really thinking about right now. And they're like, I'm just going to hold off. I don't even need heat. I don't need that. I can open my front door and cook an egg. So um, we will, as we progress into July, though, start talking about what natural gas inventories will look like for the winter and how we're going to fill them. I'd have to kind of scour more of the G7 statements to see if we're talking about oil. I don't see natural gas, but I'm sure natural gas is on here as well. Sanction packages, it's probably in here, but natural gas will start becoming a player. So I'd like to see kind of how these things start breaking through and kind of where the stabilization is when we start talking about it. I do think, not right now, but I do think we do have some bullish opportunity coming up again with natural gas. If you guys are unfamiliar with natural gas, it is quite difficult to play. It is very, very volatile. But again, Nadex does offer us a little bit of volatility protection with binaries, so it is something that you can trade on the market, particularly once we start hearing about winter gas, um, winter natural gas storage and facilities, things like that. That will start driving the price again. There may be some really, really good opportunity there. Gold. Gold, I would say, again, yesterday I blocked off 1843, 1813. We're literally just bouncing back and forth. You can see it's down 0.06. Nothing in there. Again, gold would be associated with PCE, that Friday release that I mentioned. That's going to be the best opportunity to play gold this week because, again, it is the preferred gauge of inflation. That's coming in right here, this 0.4. Again, expected to be higher. Wouldn't be shocked if we see some movement in the price of gold from now till then. Just trying to get us in the right position, right? But again, this is going to be the gold trade later on this week. But I think either of these two levels from now till then will be decent. And again, remember, we had some major news over here, right? Some major FOMC, interest rate rising coming in at 1814. As we kind of creep and try our best to get back down there should be some buyers stepping in again. Again, coming in right at this level. So keep your eye on that one. If we can get to, at a European session open or a US based session open, I think either of those could be decent bounce levels. Silver. So there's what we're looking for silver. We're looking for a pullback. Didn't really get the entry that we'd like. It literally in one candle came back up and then kind of bent. There was no basing in here. It's kind of now pushed down there again and kind of stabilized itself. It's using 21 as kind of its I would say its magnetism point right now. Again, the same that goes for gold goes for PCE going into Friday. Silver's got a couple other things as well going for it. Any news out of China should provide a little bit more of a push to the top side. But obviously, you can see the performance is silver is just not doing well this year. But I would say that 21 is probably around where the bottom is. For anybody buying physical silver, it's got to be loving this $21 point. And if we're able to push down, I think the next time I have decent buyers coming in, like stronger buyers, is going to be down here at $20.38. So I think 21 will be the area where we really kind of just is kind of like home base, for lack of a better word, for silver. But again, silver is like natural gas, a little bit more challenging to play. It does kind of float back and forth on technical levels. Now, Bitcoin also flat. I mean, it looks like it's down right now, but again, Bitcoin's flat. Ethereum's down 0.23. Doji is down a bit more, down at minus 4.8%. That's actually the biggest of the crypto losers right now. And that's down all the way down to 6 cents. And again, probably not a whole lot more room to the top side for that either. And bonds. Bonds are actually up a little bit as well. And we know what happens with bonds. Bonds are good when indices are bad. And again, they're all kind of holding there. They're all kind of holding those positions right now. Look at this. This tried its best. Look, it did do the pullback. ES is kind of like, oh God, we're doing the pullback, and then YM is kind of the same thing. They're all doing the same pullback right now on a lot of these trades that we talked about from earlier today. So still rolling forward. All right. With that said, it is 101. I know we kind of went a little bit quick there towards the end, but right now, again, mark your clocks or mark your calendars for July 5th. I can't believe the next time that we will be on is July 5th. Into the second half of the year. Mark it at 12 p.m. Eastern. If you have any questions, again, like I said, I do try to make myself as available as possible. Again, support at keeptradingsimple.com. Any questions? I said anything too fast today? I wasn't clear. It's like, hey, your COVID brain took over. I didn't understand what you meant by that, Brian. Shoot me the message. It may take me a day or two to get back to you, but I'll do my best. And then, again, with that said, as soon as we have an answer on the Morning Market Movers program, we will let you guys know. Make sure you follow YouTube over. Make sure you follow Nadex over on YouTube. You can also follow keeptradingsimple.com on YouTube as well. That way, you're able to kind of find out either way when we go live or not live. So, with that said, I'm out of here. You guys have a great trading day. Thanks for joining me today, and I'll catch you guys next week. Take care.